BBC TV 18, celebrating 15 years of leadership.
Our top story tonight, one day to go. The fate of the insurance bill still hangs in balance. Ruckus and Rajya Sabha stalls the bill on the penultimate day of the winter session of Parliament. The government now mulls extending the session, says the ordinance route is still on the table. Bulls spread the Christmas cheer on the Lal Street. The Sensex rallies over 300 points. The Nifty regains 8,300 as a late rally lifts sentiment. The rupee gains strength marginally. Crude oil prices make a feeble attempt to rebound. Brent falls back below $62 a barrel. European markets surge and the Russian ruble gains some strength. Strapped for cash, SpiceJet submits a fresh revival plan to the Aviation Ministry. Former promoter Ajay Singh says it could take up to 2 to 3 weeks for a deal to materialize. That's an exclusive. The Reserve Bank steps on the gas in its fight against bad loans. Banks empowered to term a borrower who defaults despite having the ability to pay as non-cooperative. Azim Premji buys nearly 1% stake in HDFC Life Insurance for 200 crore rupees. This pegs the valuation of the company at about 21,000 crores. SEBI ramps up the pressure on DLF at the Securities Appellate Tribunal, says it has received multiple complaints from investors against the company for flouting norms during its IPO in 2007. And the trial into India's biggest corporate fraud till date has reached its climax. The special court in Hyderabad is expected to deliver its verdict on the Satyam fraud case tomorrow. And as 2014 draws to a close, we take a look back at the big news makers, starting with Jignesh Shah. His fall has been as spectacular as his rise. And it's been touted as the new sunshine sector of the country. A special report on the giant strides taken by the budding e-commerce landscape in India.
बहुत ठंड है सर आज लास्ट से हटने का मन नहीं कर रहा।
ठंड के मारे बुरा हाल है और ट्रैफिक में बड़ी भीड़ चल रही है।
North India is shivering as the mercury continues to drop. Yesterday was the coldest day in Delhi, with temperatures hitting 4.8 degrees. And it's not just outdoors. The freeze continues in the parliament as well. With just one day to go, the fate of key economic legislations is hanging in balance. Good evening and thanks for joining us on India Business Hour. I'm Surabhi Upadhyay. The parliament is our top focus tonight, but let's kick things off with the day's trading action. Now, the bulls came to life in the last hour of trade as the Christmas week is off to a flying start. The Sensex rallied over 300 points as it moved closer to the 28,000 mark. The Nifty cracked a century as well to reclaim the 8,300 level. Mid-caps were not far behind, with that index gaining over 100 points. We'll get you a more detailed wrap of all the trading action a little later on the show. But the big story, as we've been saying this evening, one day left and the deadlock continues. Ruckus from the opposition marred the penultimate day of the winter session of Parliament. Crucial economic legislations like the insurance bill, the constitutional amendment to GST and the coal mines bill are stuck in the Rajya Sabha. The opposition is united in demanding a statement from the Prime Minister over the reconversion issue. The Congress today even accused the government of indirectly supporting conversions. So with just one day to go, has the economy once again fallen prey to politics? Well, Chandan Mitra, the BJP MP and the chairman of the select panel on insurance bill, said that the centre will explore all possible options to make insurance FDI hike a reality. Mitra said that the ordinance route for insurance is, of course, still on the table. Now, Parliamentary Affairs Minister Venkaiah Naidu has said that the centre will consider the possibility of even extending the session, but the opposition remains quite adamant on its demand that the Prime Minister must speak on the issue of religious conversions.
We want the bills to be passed. That is our priority. We hope that the opposition will rise. Let us see whether the opposition want the progress of the country or they want to obstruct the laws.
So a lot of heat, but no real progress made, at least on those key critical legislative areas when it comes to the economy. My colleague Rituparna Bhuya now is joining in, and he's had a very busy day tracking all that action, or Ritu, should I say non-action in Parliament. What's the sense you're getting? This meeting becomes very important on the extension of the session tomorrow?
The Treasury bill members tell us that there are two options. Firstly, to extend the winter session of the Parliament, and secondly, even if after extension the key legislations do not get passed, then you take the ordinance route, be it on insurance, be it on coal. But when we spoke to opposition members, be it the Congress, be it from CPM, they told us that there is no question of they supporting the ordinance route, because key legislations need discussion in the floor of the House, be it in Lok Sabha or be it in Rajya Sabha, and it's the government who's responsible for the logjam. As far as the extension of the current session is concerned, opposition members tell us that that again is not an option for them. But then again, we will know tomorrow if the Lok Sabha and the Rajya Sabha will be adjourned sine die. As far as the ordinance route is concerned, we spoke to the select committee chairman, Mr. Chandan Mitra, as well as P. Rajiv of the CPM, as well as Mr. K.V. Thomas of the Congress, on what the government can do as far as its options are concerned, and this is what they had to say.
Actually, you should ask this question to the opposition, particularly the Congress, which have blocked proceedings for the last several days, and today also realizing how important it is for the country's economy and image. They seem determined to block all proceedings and prevent the bills being passed.
So what happens now? Is ordinance a way out if the bills does not get cleared in this session?
Obviously, every route will have to be explored, and ordinance is one of those routes. I think the government will take a view only when the session ends tomorrow, because we are hopeful that somehow good sense will prevail, and if not today, at least tomorrow, the Congress will give up this kind of disruptive activity and allow the passage of these two bills.
It is not the adamant stand of the MPs. It is the adamant stand of the government.
Right.
Usually a Prime Minister comes and explains an important issue like conversion.
Right.
Why don't they come and explain it? It is something simple.
Is the extension of the winter session an option for parties, including the Congress and the left?
At least to be decided in the Business Ministry Committee.
Right.
And that we leave to the details. Only it is one more day.
Right.
I don't know what is going to happen.
Right, sir. My last question to you, sir, is coal is it's a very critical issue because power plants will not have coal if a certain mechanism is not approved.
From what I could understand, that they just get out of the Supreme Court clutches. They are bringing this bill. But it should be discussed. What we need is a thorough discussion on coal, because there have been a lot of allegations. We need energy, electricity, but that does not mean you can simply sell the coal fields. So government should have come on that coal and LIC. They should have come to the party.
Last question to you, sir. Do you see any business being transacted on the last day, sir?
And the thing is the approach of the government. We demand the presence of the Prime Minister to discuss a motion which I have moved in the House. That is to discuss the issue of attack on secular fabric of the country.
And that logjam continues. Let's move then to the big corporate story of the day. Cash-strapped airline SpiceJet is struggling to stay afloat, and sources say that former promoter of the carrier Ajay Singh has said it will take up to 2 to 3 weeks' time to raise funds. The airline has submitted a fresh revival plan to the Aviation Ministry today. Sindhu Bhattacharya is here with all the details. Sindhu, what is this new proposal all about? What have you been picking up?
So Ajay Singh has said that it will take 2 to 3 weeks because these are Christmas holidays, and he is in negotiation with half a dozen private equity investors based in Europe and the US. But this may not be good news for SpiceJet because as we've been saying, it owes about 1,400 crore in dues to oil marketing companies, to airports, to lessors, etc. It has spoken of bringing back its aircraft. It has spoken of, Ajay Singh has spoken of investments, but there is really very little money that has come in till now. The government had earlier said that it will give December 31st as a deadline for some stakeholders like the Airports Authority to start putting the airline on cash and carry. But by then, if the potential investors bring in about 200 crore rupees in the bank, then further action will be staved off. We still don't know if that will happen, if those 200 crore will come into the bank account of SpiceJet by Ajay Singh or other investors. What we know is that December 31st is one date to watch out for, and second, that Ajay Singh is keen on investing. We heard that he wants to buy out the airline along with these PE investors, and this may mean that the Marans are completely out of the airline. Back to you.
All right, Sindhu, thanks so much for that. Well, Sindhu had a pretty busy day today. She also caught up with the CEO of Vistara Airlines, who expressed hope that the government would soon do away with the 520 rule, which mandates a carrier to be 5 years old and have at least 20 aircraft in its fleet before being allowed to serve international markets. Listen in.
Well, we are hopeful that the 520 rule will go away. In fact, I think the writing is on the wall. As and when the 520 rule goes away, we will relook at our operations. In fact, we got some in mind, some scenarios in mind, and there are some destinations overseas that we can operate using the existing fleet of aircraft that we have, which is the Airbus A320 with a 4 to 5 hours flying range. But if there are other destinations that we intend to go that requires a longer range than what this aircraft can support, then we would have to go out to the market to procure aircraft, whether we purchase or we go lease, and this takes time. So while there's great optimism the 520 is going away, right now our fleet plan, our operations, our structure is all geared up towards operating a domestic operation, because right from the start we know there's an existing 520 rule in the market, and until that goes away we are confined to operating in domestic. So very soon, hopefully when the 520 goes away, I'll be able to share with you a bit more about what our international growth plan is.
Do you see competition actually spoiling your party, because the market is extremely fierce? There's more supply right now than demand, even in the peak season probably, or when you launch, that will not be the peak season anymore. So do you see competition spoiling the party for you at some point, either through price wars or through offerings similar to yours?
Well, I think the aviation industry is no different from many other industries. The so-called global village, the globalization has made industries competitive across the whole spectrum. I think what we are focused on doing is, a few things within our control. We are focused on delivering a very good, high-quality, consistent product that is differentiated across different market segments.
All right, Vistara, they're betting big on its India plans. Let's move now to some important news coming in from the Reserve Bank of India. The RBI has announced broad procedures whereby banks can declare a borrower as non-cooperative. This follows an earlier notice issued in February in which banks were asked to do higher provisioning for loans given to non-cooperative borrowers. Lata Venkatesh is now here to explain today's rules. Lata, what are these new rules and how will this help in RBI's mammoth war against bad loans?
Well, actually, what the Reserve Bank has done today is it has announced the steps, the rules by which a borrower can be declared non-cooperative. These are the rules. First of all, independent directors cannot be considered non-cooperative. If a company has not been paying in spite of having the money, then the promoters and the directors who are involved in running, that's the executive directors, can be declared non-cooperative, not independent directors or directors appointed by the financial institutions. The second thing is the procedure. The bank should first comprise a panel including the executive director and the senior general managers involved with the account. They will go into the merits of the case, and if needed and if they find sufficient grounds, issue a show cause notice. The borrower can come and meet the committee and defend himself. Thereafter, it goes to a review committee where the CMD or the managing director, the CEO, and plus a couple of independent directors of that bank are members, and they have to confirm that this guy, the company involved, is not cooperating. Now, what do you mean by non-cooperation? Even that is a little more flexibly defined compared to the earlier rules which came out in February. It involves that the company is not paying in spite of having the money, or it is thwarting recovery after not paying, or it is not allowing the bank to access the collateral which it has given in place of the loan. So these are the conditions, fairly loosely defined. And finally, the bankers say that in spite of all these rules, it doesn't necessarily mean that they are empowered. The bankers' view is that ultimately even this can get into a legal problem like the willful defaulters issue. Companies can access the court. So while it certainly puts the fear of God among borrowers, they're not very sure that this will mean that the creation of fresh NPLs is going to get any slower.
All right, Lata, many thanks for that. Let's then move on to the DLF versus SEBI case. The market regulator began its arguments today before the Securities Appellate Tribunal. SEBI disclosed that it has received not just one, but multiple investor complaints against the realty giant. Prerna Barua gives us an up-to-date wrap of really what happened and how the arguments panned out today. Prerna?
Well, that's right, Surabhi. This is exactly what SEBI has informed this appellate tribunal today, that it has received multiple investor complaints against DLF. Now, this reply comes after DLF's lawyers argued that SEBI penalized the company without actually receiving any complaints from investors, and that SEBI's impugned order was only on the basis of a single complaint filed by Kim Suk Sinha, who is not an investor. Now, SEBI's counsel also argued that the regulator could not be convinced that DLF was unaware of about the FIR filed against it at the time of filing the prospectus and revised prospectus thereafter before its IPO. Now, there were 336 companies that SEBI believes to have ceased to be associates of DLF at the time of filing the prospectus. And interestingly, SEBI's counsel also pointed out that one of DLF's arms, Shalika, can be cited as the best example of a shell company, as the transactions between the three subsidiaries of DLF were layered in such a manner in order to avoid suspicion. Now, SEBI will continue to argue against DLF's appeal tomorrow as well. And meanwhile, the appellate tribunal has directed SEBI to submit the correspondence between the merchant bankers and auditors, and also submit the files pertaining to the period between the first DRHP and the revised DRHP filed by DLF. Back to you.
All right, thanks, Prerna, for that. Now, staying with court action, the trial into the biggest corporate fraud in India has reached its climax. A special court in Hyderabad is expected to pronounce its verdict in the Satyam fraud case tomorrow. Sajit Mangat is here with a heads up on what to expect. Sajit, it's almost 6 years now, and a verdict is finally upon us. What can we look out for or expect tomorrow?
That's right. The 6-year trial of the Satyam scam is expected to be pronounced on Tuesday morning. The special CBI judge, BVLN Chakravarti, is expected to pronounce the judgment on Tuesday. If you go back to the background, Ramalinga Raju had confessed to accounting fraud on Jan 7, 2009, and a multi-agency probe was undertaken on the behalf of government, which included ED, SFIO, and CBI. CBI began its investigations in February 2009, and as part of its investigation, it charge sheeted the management of Satyam Computers, which included Ramalinga Raju, his brother Ramaraju, and Vadlamani Srinivas, who was the CFO of the company. They also charge sheeted the then PwC auditors, which included Gopalakrishnan and T. Srinivas, and other employees, which included the internal auditor V.S. Prabhakar Gupta. The CBI did not file any case against the independent directors on the board of Satyam, but they filed 3 charge sheets, which was filed on April 9, 2009, November 2009, and Jan 2010. These 3 charge sheets were clubbed into one by the special judge of the CBI, and a trial undertook as part of that. During trial, CBI had alleged that the scam caused a loss of nearly 14,000 crores to the shareholders of Satyam, and it CBI had charged offences ranging from falsification of records, cheating, criminal conspiracy, forgery, and causing disappearance of evidence. The charges framed by CBI can attract punishments between 3 to 14 years if convicted on Tuesday morning by the court, and that's what we're going to watch out for when the court convenes in the morning.
All right, Sajid, thanks so much for that. Let's then get back to some corporate news. Wipro founder Azim Premji has bought nearly 1% stake in HDFC Life Insurance. Now, where does this value the company? Manasvi Gilani is now joining in with details of this transaction. Manasvi, we saw the reaction on the stock towards the end of trade as well. What else have you been picking up about this deal?
Right, so to get straight to the transactions, like you mentioned, it's a little under 1%. To be precise, it's about 0.96% that HDFC has sold in its life insurance business to Azim Premji Trust. The sale has fetched them about 200 odd crores. With this, the per share value now stands at about 105 rupees, while the firm entire value is pegged at about 21,000 crore. We understand that the deal is going to be concluded in two tranches. The first tranche will have a transaction of about 63% stake, while the rest will be subsequently closed. Now, it's very, in this case, HDFC that holds about 72.36% of shares in HDFC Life, they are going to dilute shares, and to that extent, their stake will reduce in the company. We do know that HDFC Life is the life insurance giant at this point in time with about 50,000 crore of assets under management, and they have been on record very kicked about their IPO launch. So if this comes in, analysts believe that this could be one of those moves, and they're heading towards it seriously. On the Azim Premji Trust side, this is not their first financial service investment. In fact, they have invested with National Stock Exchange, and their other portfolio comprises of some e-commerce and healthcare companies. So if the insurance bill that has been awaited by the life insurance payers goes through, it is definitely a win for both of them.
All right, Manasvi, thanks so much for that. So that's the latest coming in from the financial space. Moving on, the mercury continues to drop across northern India as the cold wave intensifies. Yesterday, temperatures in Delhi dipped to 4.8 degrees. That's the coldest day so far this winter. The cold wave has claimed 11 lives in Uttar Pradesh and 2 in Jammu and Kashmir. 4 deaths have been reported in Delhi as well so far. Here's a report.
As the cold wave sweeps across North India, a dense fog enveloped not just the capital, but many parts of Uttar Pradesh, Haryana, Punjab, Jammu and Kashmir and Himachal Pradesh. As visibility has reduced by around 20 to 50 meters, normal life has been thrown out of gear.
बहुत प्रॉब्लम्स हैं, हमेशा लेट हो जाती हैं ट्रेनें. कुछ ऐसी व्यवस्था करनी चाहिए कि जिससे हमेशा सही रहे ट्रेन का सिस्टम.
बहुत दिक्कतें हो रही हैं, ट्रेनें काफ़ी लेट हैं. हम लोग सुबह जो है 6 बजे आ गए थे, 7:30 बजे आने वाली ट्रेन है वो 12:30 बजे आ रही है.
At least 23 flights flying in and out of Delhi have been delayed while 5 have been cancelled. According to Northern Railway, around 50 trains are running late, 12 have been rescheduled and 4 train services have been cancelled.
It is a waste of time, it's a large waste in terms of money because it's peak season. Many of the hotels are not really accommodating if you have missed the night and you have already paid for it because their room has gone waste itself. So yes, it definitely is hardship, and going forward if the fog intensifies, we see people really having difficulties in their travel plans and not really enjoying themselves as much as they would have liked to.
The maximum temperature in the capital was 15 degrees Celsius, around 7 degrees below normal, while the minimum temperature for the second consecutive day continued to be 4.5 degrees Celsius, 2 degrees below normal.
Sunday was the coldest day in 11 years in the capital. According to Met Department, the fog will continue and the winter chill will intensify. And that's not all. Do get ready for the day temperatures to dip further. In New Delhi, Reena Bharadwaj.
That's it on India Business Hour this evening. Thanks so much for watching.
CNBC TV 18, celebrating 15 years of leadership.